All right. What is up, tycoons? What's up, traders? Coming at you guys with another viewer request. We're going to be taking a look at Harmony 1, ticker symbol ONE, breaking it down for you guys on the daily chart as always. We're going to go over some key factors in determining trend continuation versus trend reversals. We'll go over the major Fibonacci retracement levels, as well as some of our bullish price targets to the upside and where we could potentially be heading if we continue this bullishness. Now, we'll also go over some of the warning signs to look for on the MACD, as well as your relative strength index, the RSI down here. So, you'll learn a lot in this video. It's going to be informational. This is not financial advice, and we're going to go ahead and jump straight into it. So make sure to smash the like button and subscribe to the channel. So the reason we look at these three levels right here, these are the 61.8, 50%, and 38.2% major Fibonacci retracement levels. Okay. Now, the reason you look at these is because these are the three most common and well-respected retracement levels that there are. There are a couple other ones, but especially if you're a beginner, you want to start off with these three. And these help you spot trend continuation versus trend reversals. Nothing goes in a straight line down and nothing goes in a straight line up. You get a move down, retracement, continuation lower, or a move up, retracement, continuation higher. And you can spot reversals once you break through your major retracement levels, which is what we did most recently over here. So if you're in a downtrend and you're retracing, continuing that trend, that's going to be your trend continuation. But if you retrace, consolidate, and break through those retracement levels, that's how you can spot a reversal. So over here, we're rejecting our levels and we're continuing lower, and we're looking to see if we're going to continue lower, retrace, and then continue lower. And look at what we do. All right, we come down, we retrace, we consolidate a little, and then we break through our levels and we get the reversal, and we've started a really, really nice rally. Harmony has been up about 200% since its most recent lows. It ran up about 215%, and we are seeing a pullback. Now, this has been a very strong move and a very impulsive move, a 200% rally in such a short period of time. So we're going to see if this trend can continue and if we can establish a 5-wave impulsive structure to the upside. Okay, so we have our wave 1 here. We got a pullback. All right, we continued up to wave 3 and we hit the wave 3 targets right over here, which is typically going to be your 1.0 extension from, your first 2 waves. So what we're looking for is we're looking to see, if we can come up and hit our 1.0 extension for the next wave. And last time we also hit the 1272 extension. So I also have this one drawn up here as well, just in case we overextend above our bullish price targets. Now, we have our Fibonacci levels here again, but rather being a downtrend retracement levels, these are going to be the uptrend retracement levels, right? So we've had this nice push to the upside. If we do get some type of a pullback, we want to hold above these 3 specific levels. Okay, it's going to be 0.0241, 0.0225, and 0.020. The reason being is because now that we're in the uptrend, it would make sense for us to get some type of a healthy retracement for continuation upwards. But if we come down, right, and we consolidate in this area and we break through these retracement levels, we could potentially be starting a reversal to come back down and test some of our previous lows over here and potentially break those and head back down to test some of the other lows. All right, but for now, things have been very bullish. We have a very bullish structure. Let's go over some of the warning signals that we do have that suggest we may get a pullback and what to look out for a potential crash and how to spot a potential crash to see if this rally is really over. So our warning sign is going to be right here on the RSI. This measures the relative strength of a token at its given price. And what we can see is that the token clearly has been in an uptrend, right? Let's look at this point right here. And we can see it's clearly made higher highs, right? So just to visualize, okay, you have a high here, you have a higher high here. But if you look at your RSI, we have a divergence, which is where something different is occurring on the relative strength index than the actual price of the token. So at the same point, we have a high and then we have a lower high, right? We're making higher lows, okay? And we're actually making a little bit of lower lows, right? Starting over here. So we can see that we actually have a bearish channel on our relative strength index right here, while we're actually trading in a bullish channel on the actual price of the token. So this would be a bearish divergence. It indicates that we could see some type of bearish activity, and it would make sense after hitting our wave 3 target to get some type of a healthy pullback. So we want to be mindful of our 3 major support levels using the retracement, using the fib retracement tool. So that way we know if we pull back, it's still healthy consolidation and a healthy retracement in these levels. And we want to see buyers step back into the market and push us back up for a wave 5. Now, this doesn't mean we have to pull back really hard, right? We've already started to consolidate and move sideways now. And if you look at our MACD, okay, the MACD, there hasn't been a divergence. So the MACD has continued to go up and continue to trend in an upwards fashion throughout this time right here. That's definitely a good signal. But what we want to be cautious of, okay, is this blue line here crossing below the orange line. If this crosses below the orange line, that would be what's known as a MACD exit signal. And it does lead to the potential that we could end up getting a larger move down and breaking our retracement levels. So we need to be very mindful of it. Now, sometimes the MACD is tricky, and it gives you mixed signals. So if we do this and we start seeing the MACD curl up and down, up and down, up and down, okay, what's going to happen is the token is most likely going to continue in the same trend that it was preceding before the MACD started chopping and going up and down. So it just may not be as smooth of a ride if the MACD starts chopping like this and going up and down. You may see the token do something like this, where it's just real choppy and it chops all the way up to our bullish price targets up here. But if we see the blue line cross below the orange line and it's creating space between it, and it's putting space between that orange line and keeps trending downwards, then that's going to signify that, we're seeing momentum start to die off, and we are going to need to really see the blue line on the MACD stay above, right? If you're bullish on this, you want it to stay above, and you want it to just continue to create space from that orange line. And even if it chops and goes up and down, and doesn't give you a clear exit or entry signal, most of the time when that is happening on the MACD, the actual price of the token is going to continue the trend, but just in a choppy fashion, right? So we might drop all the way down here real quick, then we might pop back up, and then we might drop back down again, and then we'll pop back up, and then drop back down, and then pop back up, right? So it would be a much more choppy fashion versus this clean structure that's been very impulsive, and you're just seeing lots of green candles followed by a small pullback, lots of green candles, and we're starting to consolidate and see a little bit of a pullback now. So hopefully you enjoyed this video. If you did, please smash the like button, subscribe to the channel if you guys are new, and I'm out.